Welcome back, traders. New week, new levels, and new rules. After last week's absolute meltdown, it's time to reset, refocus, and rearm for what's next. As we all know, April kicked off with a brutal reminder that price respects no one and all plans can fail. So last week was about one question: can buyers hold the balance? Answer: a hard no. Following the tariff news on Wednesday and aggressive selling pressure on Thursday and Friday, ES dropped 361 points, slicing through August, April, May, March, and February's low, and even cutting through January's 5,099 value area low before bottoming at 5,074 and closing just above 5,110. We see that buyers didn't just lose control, but they got steamrolled. So grab your coffee and your charts, let's have a look. The monthly structure is still one time framing down with a high at 6,052.75, and this month we see a triple distribution with the lowest distribution formed right below 5,316. The average drop in value is 296 points compared to last week. So we can conclude that price is aggressively discovering lower ground and fast. On the 10-day volume profile, we see that we are still one time framing down with a high at 5,837.25, an average 81 point drop with clean structure breaks across the board. And the double distribution is here forming below August value area low at 5,358.75. So as we see volume shifted far from the bulls, new price acceptance is forming way lower. On the weekly volume profile, we see another one time framing down with a high at 5,773.25, a wide 297 point value area, but what stands out is the formation of a double distribution below 5,316. The next big structural low is 5,014 from January. And we see that Friday's open was a trapdoor. ES opened below value and never looked back, diving into the abyss with a 361 point nosedive. And on the 4-hour chart, we noticed that last week's bullish hope ended at 5,527 with a clean break of structure at 5,533. All that is left now is a major volume spike above 5,105. This will be the first battleground for bulls trying to reclaim value. So as a weekly line in the sand, I will take 5,112, which is the top of the volume spike and a pivot zone for momentum. Bulls will need to reclaim this zone, then push through the double distribution at 5,435, breaking the daily one-time framing down structure for a true reversal, while bears will stay underneath this and target 4,920, which was prior resistance turned potential support. So guys, this week is not about revenge trading, it's about survival and strategic setups. The trend is strong, the market is volatile, and liquidity is king. And as a reminder, this is just a weekly roadmap. Your detailed day trading game plan drops tomorrow morning right before the bell across all platforms. So hit like, subscribe, and if you use Tradezella, check out my Sentinel playbook. It's free and linked down below. So I'll see you in the next one. Stay sharp, stay focused.